Welcome to the deep dive. We're here to cut through the noise and really unpack complex topics for you, the investor. Imagine, just for a second, the sheer challenge in discovering new drugs. I mean, it takes years, maybe a decade, costs billions.
And the failure rate is incredibly high. It's a tough game.
Exactly. And honestly, the core process hasn't fundamentally changed in, well, ages. Until maybe now. Today, we're diving into Absci Corp, ticker ABSI. They're a really interesting company trying to use AI to, drag drug discovery into the modern era. Our goal here is simple. Take all the expert analysis, break it down, and give you a clear picture of what Absci is about and what investors should be watching.
That's the plan. We'll look at the data, the details, and really focus on how all this information helps you understand Absci's position, its potential, and the risks involved. It's about connecting the dots for you.
Okay, let's start right there. At the basics, Absci Corp. When you hear AI-driven drug discovery, it still sounds a bit like, well, science fiction. So what exactly are they doing? And maybe more importantly, what's the big problem they're trying to fix in the pharma world?
Right. So Absci is tackling a major bottleneck.
Yeah.
Finding the right therapeutic protein, the potential drug, and then figuring out how to actually produce it efficiently. Traditionally, that's just a really slow, iterative process. Lots of trial and error.
Painfully slow, I imagine.
Exactly. Absci mixes synthetic biology, advanced AI, and high-throughput screening to basically speed that whole thing up dramatically. It's less about just tweaking the old methods and more like a fundamental redesign. They use synthetic biology to create specific data.
Wow.
Data their AI needs to learn effectively. This creates a kind of feedback loop, a powerful one that traditional labs just can't easily match at scale.
That feedback loop idea is really interesting. So they're designing proteins, testing tons of them quickly, and even setting up the production lines. It sounds very comprehensive, like an end-to-end thing. Is that integration, the AI plus the biology, is that their main competitive strength? And who are they doing this for?
That integrated platform is absolutely central.
Yeah.
Many companies might do, say, AI for discovery or focus just on cell line development. Absci tries to connect it all, from the initial protein design right through to having a cell line ready for manufacturing. This lets them learn across that whole early development spectrum. And crucially, their business model relies heavily on partnerships.
Ah, okay. So they're not making their own drugs primarily.
Mostly not, no. They work with pharmaceutical and biotech companies, providing the technology platform to help those partners get drugs to market faster, more efficiently. You could think of it as selling the picks and shovels during the biotech gold rush, maybe.
Picks and shovels. I like that analogy. It makes sense. Okay, let's pivot a bit. My investor brain immediately goes to the financials. This isn't like looking at a company selling widgets, right? So how should we even start evaluating Absci's financial health? Traditional things like profit might not tell the whole story here.
That's a really critical point for any early-stage biotech, especially one this deep in R&D. You're right. Current profits, almost meaningless at this stage. Instead, you need to focus on their financial runway. How long can they keep going?
Okay, runway. So what tells us that?
Key indicators are, first, their burn rate. Simply put, how fast are they spending cash? This tells you when they might need to raise more money. Second, look at their funding history. How did they raise capital before? Equity offerings, convertible bonds. This gives you a sense of their ability to raise more cash, but also the potential for, shareholder dilution.
Right, more shares outstanding means my slice gets smaller.
Potentially, yes. And third is just general financial stability. Look at their liquid assets versus their debt. But honestly, for companies like Absci, the investment thesis is really built on future growth potential and the tech, not today's bottom line.
So if they're not selling, say, a blockbuster drug themselves yet, how does the revenue actually come in? What fuels that big R&D spend? Is there something unusual about their revenue model we should know?
Yeah, the key thing to grasp is how closely their revenue is linked to their partner's progress. It's not guaranteed steady income. Their main streams are technology licenses companies pay for access to the platform. Then there are research collaboration agreements, fees for using Absci's AI and lab services.
Okay, that sounds fairly standard for a platform company.
It is, but the potentially biggest piece is the milestone payments.
Ah, tell me about those.
These are payments Absci gets when a partner's drug candidate, developed using their tech, hits specific pre-agreed targets, like, say, entering preclinical studies, starting phase 1 trials, maybe even reaching commercialization way down the line. So for you as an investor, it's less about stable quarterly revenue and much more critical to track the progress and the probability of success of their partner's drug pipelines. That's where the big potential upside lies.
That completely changes how you'd read their financial reports.
Mhm.
So when those quarterly or annual results come out, what specific things should we be laser focused on besides just that top line revenue number?
Well, you do want to see revenue growth, especially from significant new partnerships. That's a good sign. But then, yeah, look closely at the operating and net losses. Don't panic if they're large, that's expected. The question is, are they within a reasonable range? Is the cash burn sustainable, given their current cash?
Manageable burn, right?
Exactly. Also, look at the R&D spending. Is it consistent? Does it seem efficient and focused on advancing their core tech? And probably the most crucial number, cash and cash equivalents. That figure divided by the burn rate gives you a rough estimate of their runway, how many months or quarters until they need more cash. For Absci, hitting those partner milestones is the real progress indicator, much more than near-term profitability.
That's a super helpful framework for the internal picture. But, companies don't exist in a bubble. Let's widen the lens. What external factors, news headlines, market trends are you really paying close attention to that could seriously move the needle for Absci?
Okay, yeah, externally. On the company-specific front, partnership news is huge, absolutely critical. You need to know who's the partner, what's the deal about, how big is it potentially in terms of milestones. Getting a deal with a big pharma player is like a massive stamp of approval. It validates the tech,
So validation is key.
definitely. Then you watch for progress within existing partnerships. Are the partners actually hitting those milestones, like submitting an IND to the FDA, starting a clinical trial? Each one can mean cash for Absci and shows the tech is working.
Makes sense. What else?
Technology news. Any announcements about improvements to their AI models, new patents, publications in scientific journals, all of that reinforces their edge. And of course, the financial filings. You got to read the details on cash, burn, runway, and any plans for raising more money. Raising cash is often necessary long-term, but it can mean short-term pain for the stock price due to dilution risk. Looking towards, say, mid-2025, we'd expect to see their 2024 annual report, Q1 and Q2 2025 earnings, and hopefully some updates on partnerships or maybe even new AI capabilities.
Okay, so lots of company-specific things to track. But zooming out further, what about the whole sector? How do trends in biotech generally, or specifically in AI drug discovery, impact Absci? Is this AI thing just a phase, or is it really changing the game?
It feels like more than a phase now. The whole industry is watching this space closely. You need to monitor overall R&D investment trends in pharma, and biotech is money flowing into discovery. More specifically, track AI drug development trends. Are we seeing actual proof, like data, that AI is making discovery faster or more successful? What's the impact of machine learning, deep learning, generative AI?
Is it delivering on the promise?
That's the question everyone's asking. We're seeing increasing validation from early clinical data coming from AI-discovered candidates, but proof of successful commercialization is still mostly ahead of us. Also, keep a close eye on M&A and partnership activity in the sector. Are big pharma companies buying up AI biotechs or striking major deals? That really signals the perceived value and could shape Absci's future options, acquisition potential or growth strategy.
And even broader than the sector, the whole economy, why would something like interest rates or inflation matter so much to a company working on cutting-edge science in a lab? Seems disconnected.
But it's deeply connected, primarily through funding. Biotech, especially early stage like Absci, is incredibly capital intensive. They constantly need money. So interest rates matter hugely. Higher rates mean it costs more for Absci to borrow money, if they borrow. More importantly, higher rates make future potential earnings less valuable today, which hits growth stock valuations hard. Lower rates, generally good news for biotechs.
Okay, cost of capital and valuation.
Right. Inflation can push up their operating costs, lab supplies, salaries impacting their burn rate, and the overall economy growth of recession affects everything. In a downturn, venture capital often dries up, and market sentiment turns risk off, hurting companies perceived as speculative, like many biotechs. Even supply chains matter for getting lab equipment.
So looking at mid-2025 again, what's the likely macro picture?
Well, the consensus seems to be a potential transition away from the recent high-rate environment. Maybe central banks start cutting rates. That would generally be a positive backdrop for funding-dependent companies like Absci. Inflation might still be sticky, but perhaps less of a headwind.
Okay, now let's get real about the challenges. Drug development is just brutal. I remember reading somewhere that 90% of drugs that enter clinical trials fail? Something staggering like that?
It's roughly that, yes. The valley of death in drug development is very real.
So even with fancy AI, what are the biggest, scariest risks for Absci investors?
They are significant, no doubt. First, as we discussed, high R&D costs and cash burn. They need a lot of money continuously. If funding dries up or gets too expensive, that's a major problem. Dilution is an ongoing risk with future fundraising. Second, related to that failure rate, is clinical failure risk for their partners. If a drug developed using Absci's platform fails in trials, Absci doesn't get those crucial milestone payments. Their revenue is tied to others' success, which is inherently risky.
Like that dependency.
Then there's market penetration uncertainty. Will the big, sometimes conservative pharmaceutical industry fully adopt these AI platforms, or will they stick to more traditional methods longer than expected?
What about competition? They can't be the only ones doing this.
Definitely not. The competitive landscape is fierce. You've got other AI-focused biotechs, names like In Silico Medicine, Recursion Pharmaceuticals come to mind, but maybe even tougher competition comes from the internal AI efforts at major pharma companies. They have massive resources and existing drug pipelines. Plus, foundational AI work, like DeepMind's AlphaFold, influences the whole field.
So, established players and other startups, any other big risks?
Oh, yes. Intellectual property. Protecting their AI algorithms and the unique data they generate is absolutely critical. Legal challenges or imitation are constant threats. The regulatory environment could change. AI-designed drugs are relatively new. Regulators might introduce new rules or requirements down the line. And finally, relying on key talent. They need highly specialized people, AI experts, biologists, engineers. Losing key personnel could really hurt their progress.
Wow, okay, that's a sobering list. Given all that, the intense competition, the inherent risks, what makes Absci stand out? What's their potential ace in the hole?
I think it comes back to that integrated platform and the data loop we talked about. By connecting AI design with wet lab validation and cell line development, they can iterate incredibly fast. Their ability for high-throughput data generation, actually making and testing proteins at scale, creates proprietary data that refines their AI in a way competitors might struggle to match if they're just, say, computational.
So the data is a moat, potentially?
Potentially, yes. And their partnership-centric model, while adding dependency risk, is also a strength. It lets them tap into the resources and pipelines of multiple partners, spreading the risk compared to just developing their own drugs. Of course, there are weaknesses too. Compared to some competitors, they don't currently have their own drug candidates deep in clinical trials, and they just can't match the sheer financial muscle of big pharma or, major tech companies entering the space.
It sounds like understanding the fundamentals, the tech, the partnerships, the financials is absolutely crucial here. What about technical analysis, looking at stock charts? Does that help at all with a volatile stock like Absci?
That's an interesting question. While technical analysis can offer some insights into short-term trading patterns, maybe potential entry or exit points for very active traders.
But for a long-term investor?
For a long-term investor focused on the underlying business, its utility for a company like Absci is probably limited. The stock is often driven by very specific news. A partnership announcement, clinical data, a funding round. These events can completely overwhelm chart patterns.
So news trumps charts here, usually.
Often, yes. A big news event can make technical indicators irrelevant overnight. So I'd say it's maybe a secondary tool, perhaps for timing trades if you're inclined. But the core investment decision should really rest on the fundamentals, the technology, the pipeline progress, and the management.
Okay, that makes sense. So let's try to synthesize this. If we boil it all down, what are those absolute core internal capabilities Absci needs to nail consistently to succeed long term? What's the foundation?
The foundation for their success really rests on a few key pillars. First, they absolutely must keep advancing their AI models. Continuous improvement in predictive power is non-negotiable. This is directly tied to their integrated wet lab plus dry lab capability, generating that unique biological data to train the AI. That synergy is vital. Third, deep synthetic biology expertise is needed to actually, build and test what the AI designs.
Right, theory into practice.
Exactly. Fourth, attracting and keeping top multidisciplinary talent. The AI gurus, the biologists, the engineers, that's critical human capital. And finally, strong leadership and business development. They need smart strategic guidance and the ability to keep building those crucial partnerships.
Oh, and efficient financial management. Managing that burn rate and raising capital strategically is always key in this sector.
We have certainly gone deep into Absci Corp, ABSI today. It's pretty clear this is a fascinating company, a high-growth story, definitely using really cutting-edge AI and biology to tackle drug discovery. But as we've laid out pretty starkly, it absolutely comes with significant risks. Absolutely. You weigh the positives. The innovative tech, the potential validation through partnerships, the growing market need for faster drug discovery. Against those very real risks, the constant need for cash, the potential for partner pipeline failures, tough competition, and regulatory unknowns. For you, the investor thinking about Absci, it really has to be viewed through a long-term lens. It requires ongoing monitoring, checking their tech progress, partner news, financials, and, as always with this kind of investment, portfolio diversification is just smart practice.
Couldn't agree more. Maybe the final thought to leave you with is this. Beyond just Absci, think about how profoundly AI might reshape not just drug discovery, but our entire approach to health and longevity in the coming years. It's a massive shift that companies like this are right at the heart of. If this deep dive was helpful for you, please subscribe.